So let's wrap up this segment, Patrick, with some good old fashioned Patrick predictions. I want to talk about mortgage rates. Where do you think mortgage rates are going in 2024? It's beginning of 2024 now. Let's talk about where do you think they end up? Give me a snapshot of where you think this is heading this year with mortgage rates. People are dying to know. I'm dying to know. Go ahead.
Listen, I have no view of it, to be honest with you, and I certainly don't want to try second guessing Bank of Canada or our finance minister. So at the end of the day, I'm like everybody else. I'm hopeful.
You don't say.
Do I have a forecast? No. Am I hopeful that they come down? I mean, the market is actually putting in place, decreases in interest rates over the course of 2024, as much as 100 basis points. I hope that comes to fruition. I have no view of it because I just cannot see myself second guessing what Bank of Canada is going to do. I did that once before and I went, oh, okay, so there is no common sense in this. It's throw a dart and decide what it's going to be. So that's where I'm at.
Okay, so since Patrick doesn't want to give a prediction, I'll give you my thoughts, which is, and it comes back to what I said a while ago in a previous segment, which is, everything always comes back to equilibrium. And if you look at the equilibrium of interest rates over the course of a longer term, they're typically in that 4 to 4.5%. And right now we're above 5. So I think it will come back down to equilibrium. Given all things remain equal. But the question is it going to come back in 2024 or is it going to take a little longer than that? I think we are going to make headway towards coming back in 2024. So I do think interest rates are ultimately going down, not up, Patrick. But I'm not going to say, there's some people out there saying, oh, interest rates are going to be cut in half by the end of 2024. If you're hoping for that, I think you're 100% wrong. Hoping is a terrible strategy. And this is what I don't want to see investors, at least I'll give you my opinion on the other direction, which is I'm not waiting for interest rates to come down to make my moves. I'm making my moves and then I'm going to ride that interest rate wave down. And when they get to lower points, I'm going to lock in some fantastic rates. There's no doubt about it. But I don't think investors should wait until the rates come down to make their moves, because by that point, the price of real estate will have gone up. It's a guarantee.
I think there's something just to expand on that a little bit, JG, which is to say this. You've created a thesis in your own mind and you've made those decisions in your own business saying, I don't see interest rates increasing. So I'm going to make decisions based on what the interest rates are today, believing that in a future model, they're going to in fact come down, not go up. So if I can make money today at this interest rate and it just stays flat for the next year or two, I'm still ahead of the game. And as interest rates start to come back into a zone that is more reasonable, I'm way ahead of the game by doing that. That's how I would recap what I heard you say.
Now, this is an interesting chart here, Patrick, because there's a lot of people predicting what the Bank of Canada is going to do throughout 2024, whether they're going to cut 1%. Right now, the overnight rate's at, say, roughly at 5%. Is it going to go down to 4.5%? Is it going to go down to 4.25%? Some of them are predicting that by the end of this year, going to be below 4% at 3.75% or even 3.5% are some predictions, as you can see on this chart. I want everyone to be aware that this is the overnight lending rate. This impacts variable mortgages, does not impact fixed rate mortgages. So you have to ask yourself the question, what's happening in the bond market? And Patrick, we've seen the bond market, and we got this fantastic chart. It has been going down, man, precipitously since October. The bonds have been going down from 4.4% all the way down to 3.2%. But those discounts, which typically get passed on to the consumers in the form of 5-year fixed rate mortgages, those are not being passed all. It has not all gone passed along yet. I think if you look at this chart, you can see that fixed rates have come down from like the 5.7% range to in the 5.2% range. So we've had a 0.5% get passed down, but the actual bond rates have come down a full percentage point. So the banks are holding on to 0.5%, 50 basis points as kind of their downside protection. At some point, I think they're going to give that up, Patrick. I just don't know when.
Yeah, we don't know when. And, I've heard a couple of stories of people getting into high fours, like 4.97, 4.95. Mostly I'm hearing low fives, just over 5 and even 5. But anyways, the point is that they're starting to come down a little bit.
And I promise you this, and this is going to be the big headlines. for the first part of 2024 and into the middle of 2024 is going to be housing affordability, because housing affordability is starting to come it's getting better than it was in 2022, 2023, Patrick. And as a result, I guarantee every politician, everyone's going to be talking about everything we've done has been working amazing. Housing affordability is getting better, folks. Now, and this is already starting. So I think investors have to be warned that this is going to happen, and not warned. Man, it is good news. It's to me, it's not a material impact. I think there's a lot more to be done here. But the fact is that people are going to leverage this, and what's that going to do? It's going to drive prices up, in my opinion.
I agree.
Hold on. Did you just flat out agree with me?
Just flat out agree.
Are you feeling okay? God, you never just agree with me.
No, I agree.
I'm either on my game or you're not feeling well, one or the other.
Well, no, I would only expand on it one little bit, JG.
Of course. Yes, go for it.
Some regions.
So just to wrap this up, Patrick, this great episode, I think we should, you talked about in late 2023, you talked about how there might be a little bit of a concern. I don't want to put words in your mouth. That may not have been the word you used, but you were watching and monitoring the building and the housing starts in Alberta because going quite fast and furious. And there may be a situation where if the housing starts outpace the population, well, that means there's going to be an oversupply of housing, and as a result, that'll drive prices down. How are you feeling about that? There's a couple of charts here you want to share.
I'm not staying awake or laying awake at night wondering about or worrying about what's happening in this particular market. But when we look at the potential for overbuilding, it is actually there. Now, I'm not worried about it at all in the single family space, but what we've seen is with the changes in CMHC financing, GST changes, all the things that are happening in the rental side of things, in the intention of getting more rentals built, we're starting to see builders go into that rental market. Now, having said that, it's just to notice the escalation in building in the province of Alberta, specifically in Calgary, far ahead of anything that's happening in, let's say, British Columbia or Ontario. Here's the concern. I keep shining a light on it. When we start to see that condo growth because of affordability and because of what builders can do in that particular condo market, we have to be very aware that the condo market in Calgary, in Alberta overall, Calgary, Edmonton, you have to be aware that it easily gets into an overbuilt situation versus the demand for those particular units.
Here's a great chart showing how much the purpose-built rental housing starts has gone up. Back to the trend, look at that trend. I mean, it was under 1,000 units. Then in 2015, it popped over. Then it went way down. And then you kind of hovered around the 1,000. And now you're at 5,000. I mean, it's really went up 5x in a big, big way. So I think this is an interesting chart for people to get familiar with. But let me put you on the spot, Patrick. Listen, you're a real estate investor that owned a lot of real estate, tons in Alberta over the years. Do you see this? And this is the part where I'm putting you on the spot. Do you see this as a possible good exit point for people that own condos that they think they're going to exit in the next 3 to 5 years? Is this possibly, based on what you're telling me, if I own condos and I thought, you know what, in the next 3 to 5 years, I'm going to exit, I might exit now, in anticipation that, listen, if you're thinking condos are going to get a little softer in the future as these Ontario investors buy up so many of them, maybe I should exit now. Do you think some investors should consider pulling their exit plans forward? Interesting question. Just came to mind.
Well, I think it depends on your point of entry into the market. If you're buying condos in Calgary a couple of years ago, yeah, I would be definitely looking at and saying, some time to get out. There's still lots of brand new capital moving into the Calgary market. And I think that's the capital that's going to get into trouble. And if people hang on too long thinking that this wave is going to continue for an extended period of time, I think they're going to find out very quickly that they're wrong. And I say very quickly, in the next couple of years, there's a real significant risk in that particular market. Now, not every condo building by any stretch of the imagination, but there's definitely a lot of those areas in Calgary where that condo market is going to be overbuilt.
One of the things that I'm very aware of, anytime we do new rentals and we do conversion projects or whatnot, we're always very aware of what's going on in the market at the same time as us. And one of the things I've always noticed, Patrick, is especially Toronto's unique because it's got so much incoming population, so much immigration coming in. It can absorb a lot of this stuff. But Calgary, Edmonton's in a different space. But what's interesting is as these condo markets go up for sale, Like it's a lot of inventory hitting the market at once. And what I'm saying is that can put out of balance supply and demand. Literally, one building can topple the supply and demand formula, and as a result, prices can start tumbling down, which is what I think you mean by people can find out in a hurry. Like one month it could be fantastic and you think you're living large. The next month, all of a sudden, prices of condos are starting to get slashed and chopped. And now it's too late. Now you've missed your chance. And I think a lot of investors, I know myself, I've always tried to, I've always been told, and I've practiced this practice, which is, exiting on the way up and leaving a little money on the table is often safer than trying to time the tip top of the market, because the odds are is you're going to get the crest of it and you're going to get the other side of it. And then you can't control the precipitous decline. You can control the way up a lot better than you can control the way down. So it's an interesting thought process around exit. I love this conversation.
Well, I think there's and here's the other side of this, and I agree with you in that. But look at this chart right now. When you talk about rental, purpose-built rentals, what happens? So the influencers that we're talking about in terms of interest rates, and in this case, it was the shift of policy with CMHC, and then the impact of GST, and what builders then got on the bandwagon to do. Now they've got a lot of immigration coming into the province. So what did builders do? Well, I got to work. I got to keep my business going, and they're going to take advantage of this opportunity. And so when you look at the influencer, now, will this last forever? Is this going to go to 10,000 units? Not likely. At some point, there's going to be a pullback, and there's a risk of an overbuilt situation. And so again, this isn't a bad news thing. It's when we look into the future, we have to look at what we got with today and where is this going. So my cautionary comments in 2023 and late 2023 is to say, we got to watch this. As an investor, we don't want to find ourselves in that overbuilt situation and say, well, we want to exit. Well, okay, it's a little bit late to do that. So we want to stay ahead of that lag.
Now, I will issue one more thing as we wrap this show, because it's gone on too long now, but it's great conversation, I think, Patrick. And that is, I've recently had several Ontario investors. They watch this show. They're curious about Alberta. They put in a lot of work in Alberta trying to make a deal, trying to create a deal. And you know what I've noticed, Patrick? A lot of them are coming back. And as I said earlier in the show, cap rates in Ontario are in many cases better than Alberta. And that's because Ontario's had a pullback in prices, and that really impacts cap rates. It impacts cash flow. It impacts everything. And I've had a lot of people go to Alberta, analyze a bunch of deals, and say, you know what, the deals are better in my backyard. I'm just going to go back to Ontario. So, listen, that's going to happen more and more as the price of Alberta continues to escalate. If rents don't start keeping up, you're going to have a wave of people coming back to Ontario. So just something for people to pay attention to. Maybe you should call me Mr. Ontario. You know what? I'll be Mr. Ontario. You be Mr. Alberta.
Okay, Mr. Ontario. I agree, by the way. And there's the only fundamental difference that and I say it's a fundamental, like it's an obvious one, which is the cost of that, cap rates aside, the actual top line cost of those units in many parts of Ontario is significantly higher than what.
Not anymore, dude. No, that's bullshit, bro. That's bullshit. You can't say that. You can buy a duplex in any one of the markets I operate in. You could buy a duplex for $550, $600, $650. The shit they're selling in Calgary is now easily $600 into the $650s and $700s. So it's not true anymore what you're saying. Used to be true because Calgary and Edmonton. Now Edmonton's different because Edmonton is different. I got to say, Edmonton, you could buy stuff in Edmonton for like the high threes and fours. You're renting it for $56. But anyways, no, I'm just kidding about that. But the point is, this is what I'm saying. People are chasing the market, and they're finding out that some of these properties in parts of Alberta are quite expensive and getting quite expensive. And they haven't looked at the pullback in Ontario, where there's some properties that, yes, a duplex used to cost you $800,000. But what if you can get that same duplex now for $600,000 and get the better rents of Ontario? Interesting. Anyways, listen, I'm just working on my Mr. Ontario narrative here. I'm going to take you up on the next episode of Rein It In. I think we'll have a head-to-head maybe. Maybe that's what we'll do.
Let's shine a light on one more thing before we end this show, and that is somebody could be watching this show going, you guys are both full of shit. Capital is moving into the U.S., and I'm seeing more and more capital and hearing from more and more people that are going, You guys got to start talking about the US because that's where the opportunity lives. It's not in Canada, it's in the US. So that's not to say, so just saying out loud, we're aware of it, we're paying attention to it. I think we got to do a segment on it next time.
Yeah, and by the way, those people that say we're full of shit, we welcome them to the show. So come on onto the show. We
Come
definitely want
on.
to talk to you. But and I'll agree with you, Patrick. And this is where I want to caution. Most people, Patrick, that are listening to the show, they are buying 1, 2, 3, 4, 5 properties over the course of their lifetime, and this becomes their financial nest egg. I want to be very clear. You do not have to go to the US to do very, very well in real estate to do that. Now, the people that are going to the US, Patrick, you and I know them all very well. They're doing deals with hundreds of units per deal. They want to buy 5, 10, 50,000 units. Yes, there's way more opportunity in the US for those kinds of people because US is just a much bigger market and it's a completely different multifamily market than we have here in Ontario. But be aware, if you're trying to buy 1 or 2 or 3 or 4 or 5 properties in order to secure your family's financial future, you do not have to go to the US to do incredibly well.
Great point, JG. Couldn't agree more.
Gosh, that's twice you agree with me on this show. I'm going to pin this one as one of the best shows we've ever done.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.